So Warren Buffett once said, if you don't find a way to make money while you sleep, you will work until you die. Now, the impulse of this message is the emphasis on having passive income to be able to achieve financial freedom. Financial freedom is a dream that everyone has. It is the point that you reach where money no longer becomes a problem. It is a point you reach where you are making income whilst you are inactive, and that income is able to pay for your daily necessities, your expenses, and you still have excess left. But the question we ask ourselves is this: what does it take to really achieve this dream of making money whilst you sleep? How can you put yourself in a position so that you will get to a point where you don't have to work until you die? So, on the podcast today, I'm going to be sharing with you a practical way on how you can make money in your sleep. Most importantly, I'm going to give you the blueprint and the two-path requires and what it takes for you to achieve this goal. Stay with me because this will be one of the most practical master classes on personal finance that will help you elevate your mindset and put you in that position so that you can become successful. Now, to be able to make money whilst you are asleep, there are only two options available. It doesn't matter the iteration or what you hear other people tell you, but there are only two ways that you can achieve that goal at the end of the day. The first way is to become an investor. This is a hands-off approach where you let your money work for you. You are an investor. Now, I'm going to be sharing with you what it takes and the things that you need to look out for in a moment. The second path is where you go on the path of an entrepreneur. This is a hands-on approach where you bet on yourself. So the question you want to ask yourself as you sit down, as you watch this, as you listen to this is, which path do I want to be on? Do I want a hands-off approach where my money is just working for me, or a hands-on approach where I am the one betting on myself and I'm in the driving seat? Is a hands-on approach and I'm going to be involved in the day-to-day activities to help me to generate the money that I want to live the life that I've always desired to live. Which of these two paths will be best for you? Per statistics, about 99.9% of the world populace will be better off as investors. The question is, which one will be right for you? The answer to that would depend on a number of options. Now, irrespective of the path you choose to make passive income and achieve financial freedom, there are 6 factors that, in my opinion, you need to be mindful of and consider before deciding whether you want to be an entrepreneur or you want to be an investor. The question is, what are these 6 factors? The first thing is understanding. Listen, if you want to be an investor, you must make sure that you understand what your money is being used for. You must make sure you understand the nature of the investment. So maybe you want to make some money. Then somebody said, oh, if you have some money, go and buy gold coin, go and buy Bitcoin, go and do fixed deposits. Oh, go and buy shares. You see, the Ghana Stock Exchange market is booming. So if you want to make money, this is the time you have to go. Hey, company A, year-on-year growth has been 3,000%. If you had put only 1,000 cedis in, by this time, your money would have been 100,000 Ghana cedis and all of those things. Yes, they all sound good. But the question you need to ask yourself is, do I understand this? If you are going to start investing on the stock market, do you understand how the stock market works? If you are going to buy gold coin, do you understand how gold works? If you are going to buy Bitcoin, do you have knowledge about the cryptocurrency, the blockchain technology, how it works? If you are going to do fixed deposit at the bank, do you understand it? So understanding is very important. And this is required because you need a deeper comprehension of the industry or the investment opportunity before you make the investment. Maybe you want to be an entrepreneur. Okay, do you have an understanding of the industry, of your competitors, of the people in the market? What makes you think that you are right to go into that industry and to succeed in that industry? That is the first thing you must have, understanding. I have seen a lot of people and they will be complaining online. Hey, I made this investment and I lost all my money. Why? Because they heard somebody doing something and boom, they also started. So they heard someone saying that, oh, I go to China and I buy these things from China, and when I bring them, I sell them and I make X amount of money. So quickly, they also gather some money, then they import something from China without having the capacity to be able to sell it. So you need an understanding. Don't follow blindly people's path. So somebody is online. Oh, if you have money, go into farming. If you have money, go into this. If you have money, go into that. Before you start spending your money, ask yourself, what I am being asked to put my money into, do I understand how this thing works? Because many people lose money because they don't understand how it works. Then later on, they come online and they'll be complaining, and this person scammed me, and this is a scam, and this is a scam. Yes, you should have done your research, gain understanding of how the thing is supposed to be and the nature of the investment before you made that investment. That is the first thing you must know about, understanding. The second key factor is competition. This is especially a factor that you want to consider if you are going to be an entrepreneur. But also, even if you're an investor, competition is something you need to understand. Because if you're an investor and you say you are going to be investing in shares on the stock market, on the stock exchange market, okay, whatever company you are investing into, it is important you understand the industry that they are in, the nature of the competitiveness of the industry, and whether this company can break and gain competitive advantage in the industry so it will be profitable and you will get return on your investment. If you want to be an entrepreneur, the same thing. Whatever business you are going into, 99.9% of the time, some people are already doing it. The question is, do you understand the nature of competitiveness in the industry? Do you have an idea of the big players in the industry and what you have to do in order to outfit them? What strategy are you going to be adopting to be successful? Competition is a key factor that you consider. And there are many people, when they are making investment decisions, they ignore competition. They only look at, the numbers. Somebody said, hey, if you buy shares in this company, the shares is going up by 20%, 30%, forgetting the scope of competition. Let me give you an example here. So let's say someone tells you to go buy telecommunication shares. Very great. So maybe you go and buy a company that is listed on the stock exchange market, whatever market it is, you buy their shares. But before buying the shares, it's important you understand the industry. Because if you have a standard telecommunication company and we have these Blue Origin coming in, Starlink is there, and the various things, you must find out what is the implication of that on the company that you are investing in. Then the other players in the market, what are they doing that may reduce the market share of the company that you are investing in? That is understanding of competition. So even to decide to be an investor, it is important you know not just about the financial performance, financial position, profitability, and outlook of the company you are investing in. It is important you have an understanding of the nature of the industry as a whole and measure the level of competitiveness in the industry and what the target firm is going to do or is doing in order to gain sustainable competitive advantage so that they can make money for you at the end of the day. The third thing you need to know about is what I refer to as tax implication. This is something many people do not look at. Whether you want to be an investor or an entrepreneur, you must look at the tax implications on your investment. Because if you want to be a shareholder in a company, meaning you want to invest on the stock market, your tax effect is going to be different. If you want to buy gold in all those things, your tax implication will be different. If you want to invest in a rental property, your tax implication is going to be different. The question is, do you understand the tax position of the investment that you are going into? If you want to be an entrepreneur, the same thing. You must understand the tax implication. So for instance, you want to be an entrepreneur. Okay, what kind of tax incentives, government policies are available for entrepreneurs? Because currently in Ghana, there is what is referred to as the Young Entrepreneurs Tax Incentive. What it means then is that if you are below 35 years and you establish a company that is into agro processing, waste processing, IT, and some industries like that, you are going to be getting significant tax holiday for 5 years. After that, there is a concessory tax that you pay. After that, before you will start paying the standard tax currently. So it tells you that, okay, if you want to be an entrepreneur from tax perspective, if you are below 35 years, then these are the industries that the government is supporting. So it means if you start a business in any of those sectors, you are going to be getting more money. Why? Because your tax obligation will be less at the end of the day because of the government's policy. That is what we mean by tax implication. So you don't just get up and say, oh, they said, hey, go into farming. Au revoir, mon ami. Then you are going into farming. Oh, they say that now, this is the new thing. Social media, content creation, that is the new thing. Then you go into it. What is the tax implication? Oh, now they say that, Charlie, the new thing is you're going to do importation business. What is the tax implication? Because you see, many a times as a finance person, when I look online, and I look at various things that people are preaching, various things that people are talking about, and they paint it as so glorious, but then there are key questions underneath that nobody is asking. So yeah, going into importation, it's good. What is the tax implication on that? Because if you make profit of 10 million Ghana cedis, and you have to pay significant portion of that in taxes because you don't know that there is a tax implication and you don't know about tax planning measures, then you're going to just work for the government and you're not going to achieve your financial freedom. What does that mean? It means that before you make any decision, you need professionals to guide you. Whether you want to be an investor in another company, don't just get up and buy shares. Seek professional advice on your tax implication. Don't just get up and say, I want to start a business. Seek professional advice and know how the business can be structured so that you can reduce your tax obligation so you can make more money. Why? Because the big companies are using it. Why do you think that big companies are willing to pay millions of dollars to tax consultants to help them reduce their tax obligation? It's there. The law is there. It's called tax avoidance. So it's there. The question is, do you know about it? So whatever investment you want to make, whether you want to be an entrepreneur or you want to be a regular investor, what is my tax position? You must answer that question before going ahead. So yes, have an understanding of the industry, know the nature of competition in the industry, know your tax implication. The fourth principle or factor that will guide us will be the exit option. The exit option is simply how you will divest if you are no longer interested. How will you go out if you are no longer interested? So someone says, invest in shares. Okay. If you are no longer interested and you want to sell your shares, what are the mechanisms to go through? Okay. If you sell your shares, what is the implication, the tax implication on it? You must know about that. That is the exit option. Okay. Someone says, go and do fixed deposit. Good news. You go do the fixed deposit. Maybe the fixed deposit was supposed to be for 2 years. If the 2 years is not up to and you want your money, what will the bank tell you? So you must know it from the beginning before you go into it. Many a times people, and again, you see, financial freedom is not just about the money you are making or the investment you are making. It's about having financial literacy. Because there are people who are like, oh, this bank said I should come and do fixed deposit. And I did fixed deposit. I put in whatever, 50,000 Ghana cedi. And the fixed deposit was for 18 months. And something happened and I went to take my money. Can you imagine that they didn't give me my 50,000? They said if I withdraw my money before the time, I would rather have to get only 47,000. Then what is the purpose of the investment? What is the purpose of the investment? It was in the document you signed on the investment, but you didn't read. Number two, Because you lack financial literacy and you don't expose yourself and you didn't engage the service of professionals and you didn't ask the right questions, you didn't know about it. So now that you want an exit, now that you are no longer interested in the fixed deposit, your 50,000, you are not even getting it. You are getting below your 50,000. Why? Because that is the terms and conditions surrounding it. So it is important to understand your exit option. Okay, someone says, hey, gold is the next boom. Okay, so if you buy gold and you need some money, you are not interested in the gold again, how do you get rid of the gold? How do you sell it? Okay, someone says, hey, cryptocurrency, buy this cryptocurrency, buy that cryptocurrency. Okay, if you buy it and you no longer want it because you need money for something else, how do you get rid of it? Exit option. Okay, someone says go into pig farming, go into this, go into that. If at a point you are no longer interested in that kind of business, how do you get out of it without losing significant amount of money? So from the word go, you must know your exit option. This is again a key investment technique that many people do not look at. And they are only going to experience it when the time comes for them to exit. Like the fixed deposits thing that I told you. Once you are locked in, you come and you say you want your money before the time, you're going to suffer consequences. And in some cases, you will get less than the money you had deposited. And it is in the contract. You signed it. But you don't know about it, so you were just thinking about the interest. So per your mind and understanding, maybe you thought that, okay, 50,000 for 18 months locked together like that. Oh, I can get some 5,600 on it. So we are now in 8 months, but I need the money. So at least they should prorate that and give me some money. No, they're not going to prorate. You may end up losing some of your money. So what am I trying to say? The path to financial freedom is not just about following advice. The path to financial freedom is not just about vibes and inshallah. The path to financial freedom depends on your understanding and having the requisite financial literacy to make the right decisions. So from today, when someone tells you to go into something, you need to ask yourself, what is the tax implication on this? When someone tells you to go into something, you need to ask yourself, what is the exit option? Because you see, every investment you make, you must know the exit option before you make the investment. So that when things begin to take a nosedive, quickly you can salvage some losses and allow the thing to go down. So that is the fourth key principle that you must be mindful of. What is my exit option for this investment? Principle number 5 is going to be your risk appetite. Now, this defines how much you can lose and walk away without stress. What is your risk appetite? And this varies from one person to another person. Maybe I can lose 100,000 cedis from an investment and it's okay. I'll walk away free. Maybe somebody can lose $1 million and it's okay. It's a normal day for them. They will walk away free. Maybe when you lose 50,000 from an investment, you will go mad because that is your whole life. So the question is, what is your risk appetite? Now, this is one myth you must understand. And I call it a myth because there is some iota of truth in it, but you need to proceed with caution. And you've heard this before. They say that the higher the risk, the higher the returns. Yeah. The higher the risk, the higher the returns. It's true, but not entirely true. Because sometimes the risk is higher, and so you expect a higher returns, only for you to go into the investment and it takes a nosedive. So the question you need to ask yourself is, what is your risk appetite? So that if you are someone who is risk averse, then you will choose safer investments. You will choose assured investments. So for instance, if you're somebody who is not that aggressive, then you can play it safe. Buy some government bonds, buy some treasury bills. You're going to be covered 99.9% of the time. The government is going to pay you back your money. Only that, Just recently here in Ghana, we had a haircut. Apart from that, all other things being equal, that's a safe investment. So if you're not somebody who is that aggressive and you are risk averse, maybe that will be safe for you. Now, if you're somebody who is willing to dive deeper, maybe other kinds of investment may be good. Rental properties. And we'll get into some of these investment opportunities in a moment. But the question you need to ask yourself is, what is my risk tolerance level? How much can you lose and it will be okay? So that should guide you. Again, this is where you see a lot of people complaining online. They said that when you download this app, every day you put this money in this app. Every week they will be giving you this amount of money, this amount of money. Then they go and put their money. There was a time where stories came up. Pastors of churches took church money, church offering. People sold their land to put into an investment opportunity because they were told that, when you put, the more money you put in, the more returns you get. Only for them to realize later on that the whole thing was just a Ponzi scheme and it crashed. So the question is, what is your risk appetite? Now, one way you can reduce your risk is to diversify your investment. So it is not, you don't have to put all your eggs in one basket. And we saw some of these things coming up where some pensioners took their pension money and saw that, they can be assured of giving money to the government. So they took their pension money and used it to buy government bonds, only for them to be told later that, hey, government cannot pay you the money you gave them. So because of that, you are going to suffer a haircut. That is risky. So to prevent yourself from losing significant amount of money, making significant losses, you need to diversify your portfolio. Do not put all your eggs in one basket. You need to diversify your portfolio. Now, that will mean that you will have in-depth understanding in what you're doing. You need to have some diversity. Because single source, all your money cannot be in one vehicle. It's going to be risky. Now, this is what you must understand. In the beginning, you can have that laser beam focus, all your eggs in one basket, trying to watch over them very well. But as you expand, as you grow, as you become more knowledgeable about the industries, the sectors, and the various things, then you must begin to diversify. So maybe you took a pension money or you got a windfall somewhere. Don't just go use the whole money for a fixed deposit. No. Again, with knowledge, understanding, tax implication, exit option, you can have some level of diversification. Yes, some fixed deposit. Yes, some shares. Yes, some government bonds. Yes, some other equity investments that are not related to the stock market. Yes. So risk can be diversified, and that will reduce your overall risk at the end of the day. But the question I want to ask you is this: what is your risk appetite? That is a factor you have to consider. If you want to be an entrepreneur, that is a risky journey. Many a times people think entrepreneurship is an easy journey because entrepreneurship means you are betting on yourself. Entrepreneurship means you're going to sink, you're going to sacrifice, you're going to put in a lot of resources. Are you willing to go that deep and bet on yourself? And if it doesn't work, what will be the outcome of your life? That is your risk appetite. That is why only a few people can dive deep and swim in the ocean of entrepreneurship, because it is a risky journey. But the question is, what is your risk appetite? How much can you lose? How far can you go before you say enough is enough? That is a question you need to answer on your journey to financial freedom. Then the last factor that you must consider is unexpected events. Listen, no matter how you plan, no matter how you put the right things, no matter the professionals that will be advising you, irrespective of your market strategy, your market analysis, there are sometimes that things will happen beyond your control. For instance, external shocks like government policies. You can be an entrepreneur and one government policy, boom, wipes the whole industry, change the outcome of the whole industry. What are you going to do? You can have an investment and one government policy, boom, is going to change it. So no matter how you plan, there are certain external unexpected things that will happen. One of them is government policies. Like what I was saying earlier, people took their pension money and trusted that government bond is guaranteed because, hey, if you lend money to the government, government will definitely pay you. But one thing people forget is that government doesn't work. Government doesn't put 99.9% of the time, the government is not doing anything profitable to get returns to pay you back your money. And so that is why when we got to that point in Ghana, in the history of Ghana, the government has to take the bow and say, hey, yeah, you lend money to me, but I cannot pay you. You gave me some money, but I cannot pay you. So guess what? You're going to suffer some haircut. The returns I'm supposed to give you, I'm not going to give you. That is government policy. How are you going to handle that? Remember, right from day one, you must make room for those things so that it helps you diversify, so that it helps you to, put some emergency fund somewhere, so that it helps you to make various decisions. Then we have geopolitical tensions. How would that happen? Recently, the United States of America was all out on tariffs for various countries. And that had a lot of implications for businesses, for entrepreneurs, for economies. How is that going to be affecting your investment in companies? How is that going to be affecting your business if you're an entrepreneur? Wars are going on. Russia-Ukraine war, whatever, tensions are brewing, Venezuela and the US, all of those things. Will they have any implication on the finance market? Yes, they will. How will they affect you? I don't know, but they will have some implications on oil prices, on prices of other goods and services. Are you ready for that? Then certainly mismanagement. Sometimes you see a great company and you're like, oh, I will buy the shares of this company. Only for you to buy the shares and the board of directors and the management team, they will run the company into the ground. Then the shares that you spent maybe 100,000 cedis to buy, guess what? Now you can sell it for 10,000 cedis. That is mismanagement. Yes, to some extent you have control over it, but you don't have control over the day-to-day running of the organization. And sometimes by the time you realize that really this company is going down, it's already too late. So again, this means that you need a deeper understanding. You must diversify. You must know your exit option, and you must have knowledge in the thing that you are investing in. Because if you don't have an in-depth knowledge, if the thing is taking a nosedive, you will not even see it. And by the time you realize it and it becomes news, you are already under the bus. So whatever investment you want to make, you must ask yourself, do I understand this investment? Do I understand this industry? You must ask yourself, what is the nature of competitiveness in this industry? You must find out, what are the tax implications of this investment, of this business venture that I want to go into? You must ask yourself, what is my exit option? If I no longer want to be in this industry, what are my exit options? Then what's my risk appetite? What can I lose and walk away? Based on that, then I need to diversify my portfolio so that I don't have my eggs in one basket, so that if something happens, I lose everything. Then certainly you got to be ready for the unexpected, because the unexpected will definitely come. The question is, will you be ready when the unexpected events happen? These are the 6 factors to consider, regardless of the path you choose, whether you want to be an entrepreneur or you want to be an investor. My question is, the last time you made an investment decision, the last time you made an entrepreneurial decision, did you sit down to look at these? Now, there are other factors we could look at, but these are the key ones that I want to highlight and bring to your attention.